Okay, so we are starting today. We're starting finance and budgeting, and I've broken it into two sections. One is on finance and one is on budgeting. So we're gonna start with finance. This is for math 20-3. So topic 1, we're talking about financial institutions and types of bank accounts. Now, some of you probably have a bank account, some of you may not. It really depends on how you deal with money. It's very convenient to actually have a bank account, because if you have a bank account, you can have a bank card. A lot of people don't carry cash anymore, and a bank account will actually allow you to have that banking card and deal with money in that way. But it can be a little elusive, right? We have this a card that we put in a machine and it gives us money, and we can be a little disconnected to the money we actually have. So there's many different types of financial institutions. Not all banks are created equally, and they offer different services. So the first thing we're going to talk about is banks. Now, banks, they fall under the Bank of Canada, and their services are going to include things like checking and savings accounts, automated teller machines, online banking. They'll also do currency exchange. So say you're going to Mexico and you want to get some pesos before you go, or you're going on a trip to the States and you want to get some American money, you can go to a bank and exchange Canadian money for currency from other countries. You can pay your bills through your bank. They also might have safety deposit boxes. And safety deposit boxes are a place where you can secure valuables or important documents. Some people put their wills in a safety deposit box if they've got some expensive jewelry, or if they have gold or silver and they just don't want to have it in their house. It's not something they need to access all the time. Same with jewelry. They may rent a safety deposit box in a bank so that they can keep their items there and keep them secure. Banks also have services like RRSPs and GICs and term deposits. RRSPs are registered retirement savings plans. So it's a way that you can save your money, not pay taxes on it now. You put it in an RRSP, and then when you retire, you can take the money out, and because you're at a lower income level, you won't pay as much tax on it. You might not pay any tax on it. So it's a way to kind of save your money now for your retirement when you're not going to have as much of an income, so that you can have a lifestyle. GICs, Guaranteed Investment Certificates. So if you don't want to put it in an RSP, but you want to save it for a longer term, but you want to get maybe a better interest rate than you might get with your with your savings account or your checking account, you can lock it into a Guaranteed Investment Certificate. And these generally have slightly higher interest rates. They are locked in, so if you take them out before maturity, you don't get your interest. And is similar with term deposits. So basically the bank is paying you to use your money. Banks also offer things like loans, mortgages, and lines of credit. Loans, maybe to buy a car. Mortgage is a loan to buy, it's a specific kind of loan to buy a house. And lines of credit might be just a loan on your bank account for incidental expenses. So a bank would offer that. Some examples, banks are TD Canada Trust, Royal Bank, Bank of Montreal, ATB Financial. And there's other ones. So you may have your bank might be a different one, okay? Now there's also something very similar, which is called a credit union. And here the account holders are members who have a say in the institution's financial policies. They're very similar to banks, and they'll offer a lot of the same services. And the primary example there would be Service Credit Union. It's probably the one we know. But in this respect, because account holders are members, they can direct some of the action of the institution's financial policies. Things like if you're offering a mutual fund, they can say, we don't want our mutual fund to be invested in certain industries, that sort of thing. There's also loan companies, and these lend money for loans and mortgages. Oops, wrong pen. They may offer better interest rates. However, they may not. Payday loans, I will say right now, never use. Okay, they can be a really bad, dangerous cycle. And it's hard for me to say that. Some people will say, but what if you need to? Well, the problem is their loan rates are so high. I would say never use payday loans. You get in a really bad cycle where you're taking a loan every month to catch you up. And it can be very, very dangerous, a dangerous cycle to get into, okay? Investment companies. So there might be more financial planning services. I have an investment guy because I don't have enough time in my life to really manage, investing on my own. So I know the way I'm comfortable with investing. So I have an investment guy and he's with Investors Group, but that's just one of them, right? Like there's lots of different investment companies out there. And basically there you'll have a representative who will look out for your welfare in terms of investing. If you can do some surveys to find out how comfortable you are with risky investing. Or, if you're saving long term, you might invest in a different way, and they might have access to different kinds of products to help you invest in a way you're comfortable. So they'd offer RRSPs just like a bank, GICs, and saving accounts. And they might also be able to help you with things like mutual funds and stock purchases. A lot of those investment companies also are going to help you plan for taxes and plan for your estate planning and choosing investments that will work and fit with you. It's somebody whose whole life is dedicated to that kind of work. If it's something that interests you, you can get a lot of courses and that sort of thing to kind of help you train to do that sort of thing. Trust companies. Trust companies will manage and invest assets for an individual or company in a estate or trust, and they will also keep records, pay bills, pay out inheritances, and distribute assets. My husband's father died when my oldest son was 3, and he left most of his money in trust for all his grandchildren. So the trust company managed that money, managed that investments, and then when all the grandkids hit 18, then they were paid out from that trust company. So they kind of act as a steward for that money and make a lot of decisions. If people are worried that their children at 18 aren't mature enough, they can put money in trust that matures when those kids turn 30 or at an appropriate age. And a trust company would help manage that. So we talked a bit about things. Now let's just talk about where we would go for various services. So looking at that and using this table, where would you go to open an account for direct deposits from your workplace? So you have a job, you want to have direct deposits go into your account so you can access that money. You're probably going to go to a bank or a credit union, depending on your comfort level. Okay? Set up account, a savings or checking account, or both, and do that. Borrow money to purchase a house. Well, you could go to a bank. You could go to a credit union. You could go to a loan company. And you could also go to investment companies. But I would say the majority of people will go to the first two, right? The majority of people will go either to a bank or a credit union for this. Those are the top ones. Set up a living will and testament. You would probably talk to a trust company to do that. If you had money that you wanted to invest for, someone who's a minor, and you want to make sure that your money is going to be managed for your inheritors, you would go to a trust company. Set up RSPs and speak with somebody about your taxes. Well, you could go to a bank, or you could go to an investment company. And like I said, both would be able to help you manage things. If you want a little more personal care, an investment company might be the way to go. But then do your research. Make sure you trust people, and trust the company. There's a lot of information out there about, where you can investigate different companies and different banks to find out things. You can also just ask your friends, ask people that you know, ask your parents, ask people you work with, who they trust and why, and ask the why. Because, I go to my bank because it's been my bank since I was 13 years old, okay? So I have a lot of loyalty. That's a long time, okay? We're talking 40 years. So it's hard to change. Now, my husband had one bank for a long time, but then he got annoyed with them because they kept screwing up. So he changed, and he's much happier with his new bank. So banks have to be careful. They have to really be careful with their clients, because loyalty is a big factor in selecting your bank. You don't want to switch your banks too often, though, because you can lose a lot of money doing that, doing all those transfers. So do your investigative work, do your research before, okay? At banks and some of the financial institutions mentioned above, they offer different kinds of accounts. So we mentioned these, things like checking accounts, savings, and tax-free savings accounts. And it's interesting, I just set my son up with his account. And he's like, what? Why do I have a savings account? Why do I have a checking account? Aren't they the same? Well, they are different. There are two different places to put your money. Sometimes if you put your money in a savings account that you can't access, particularly if you can't access it with your debit card, you might be more likely to save that money, okay, and not spend it. So, checking account. Now, and we call it checking account. So many people don't use checks anymore. I certainly do. Now, it's best for day-to-day banking. And this includes debit card purchases. So if you're using your debit card, you do get checks provided, and that's important. People don't use a lot of checks anymore. We do a lot of e-transfers instead of checks. But there are some places where you still need a check. There's some places that will ask for a void check. At work, they might ask you for a void check to set up your account. If you don't have a void check, you have to do a certain form. But checks are going away. We're doing a lot more of a e-transfer system or automatic deposit, right? You can also do bill payments and pre-authorized payments, and you can use the ATM. Now, why have a savings account? Well, like I said, savings account is a place to put your money where it focuses on saving money. You want very few account transactions, and sometimes they charge you for doing more account transactions. But I find that if I put stuff into my savings account, I'm less likely to spend it. And I spend them, I can budget better. When we talk about budgeting, we'll talk about this. If you put the bulk of your money in your checking account, and then, or the money that you need for day-to-day expenses and monthly expenses, you put in your checking account, and the rest you put in your savings account. Hopefully you can grow and build it. It can have a high service charges for withdrawal, but it also earns interest, okay, and generally might earn at a higher rate. There's also something called a tax-free savings account, and no income tax is paid on the interest that is earned, which is key, and it allows investments up to $5,000 a year, but the account holder must be at least 18 years old. So I talked earlier about my son. When he got his inheritance, one of the first things we did was we set up a tax-free savings account so he could put that money away, so that he didn't have to pay taxes on it, or on the interest that it earns, right? Okay, so let's talk about which type of account you would use. What type of account would you use if you needed to write checks? Well, there's a big key word in that question, which is the word checks. So you'd probably want a checking account. If you wanted to pay bills, checking account. Saving money for purchasing a vehicle, probably a savings account. Or maybe a TFSA, tax-free savings account. But most likely a savings account for that kind of purchase. Okay. Now, banks offer different service packages. Each service package offers a variety of services and may charge a fee for particular services. This below is what ATB offers to their customers. There's a lot of different details. There's a monthly fee for the ATB Advantage account and the Unlimited account. The basic account has a smaller monthly fee, but it's got limited numbers of transactions. So if you know you got a lot of transactions, then you might have to go to one of the other ones. They also have a pay-as-you-go account, which has no fee, but you pay per transactions, right? Like you're paying for your withdrawals and you're paying for your checks and your electronic withdrawals and transfer, okay? Now for all of these, online banking service is free. Telephone banking inquiries for the first two is unlimited, and the others you get 20 free and then you start to pay for them. Check image return, free for some, and overdraft protection, no fee unless you use it. It's interesting, some banks, if you look up here, some banks will waive fees if you have a minimum balance of a certain amount, right? Because that encourages people to put their money in the bank. And when your money is in the bank, it's not sitting there on a shelf. They're using it for different things. So they're going to have it when you want it back, but they want you to have more money in their account because then they can be a little more liquid and they can do more stuff with it. Okay? So, and there's also a Students First account. So if we look over here with the Students First account, which I can't quite see the whole thing, monthly account features and fees, transactions included are 40. There's a very low monthly fee, and basically with that Student First account, they kind of cut you a little bit of a break because you're a student, and it makes your student's life a little easier. Okay, so let's look at an example here. Laura is a student who is working part-time. She wants to open a new bank account. She currently has $7,500 to deposit, and her expenses are $1,300 per month. She earns $1,500 per month at work, which she wants to be directly deposited into this new bank account. She usually writes about 2 checks or makes 2 payments per month. She pays all her bills online and uses her debit card approximately 10 times a month. Which ATB account would be the least expensive choice for Laura, and why? Well, she's a student, so she should probably use the Students First account. Why? Well, There's a really low monthly fee, right? It has 40 transactions included. That's per month, right? And that covers all of hers. Okay. She could also, however, she could choose the ATB Advantage or Unlimited. She has enough money to waive the fees. And they don't charge for those transactions. But because she's a student, this one is a little bit easier. When she stops being a student, she has to transfer to one. One of those two might be a good choice. She has enough money to waive her fees. As long as she's keeping that balance, she's doing good. Okay. There's more detail in the key if you want to look at it. Which account would be the least expensive choice for you? And that's going to be personal. You know the amount of money you deal with. Many of you might do the student first account, and because of your age and what you're doing, but you don't know if you're going to be staying in school for how many more years, and you might choose one of these two if you don't have a large balance. So basically what you want to do is you want to look at how you're going to use that account. Like, are you going to be doing a lot of transactions every day? Do you go to the Instabank and use your debit card so that you rack up those transactions? We don't think about it when we do it, but it does. If you go over a certain number per month, then you're going to it's going to start costing you money, right? So you don't want to use it for little tiny purchases. Okay. Alrighty. So now it's time for a little practice. So you can use the chart on page 1 to answer the following questions. So you're going to do some practice. It's going to be investigating. And there's some more information, some more charts here. There is an answer key for you, but it's time to investigate some financial institution questions. I encourage you also to take a look at some other banks. Go to their websites, check them out. We've got the information there for ATB, but it's very different if you're looking at CIBC or Scotiabank. Not very different. They're just going to have different names and different products. And you want to find one that works best for you. And it doesn't hurt to talk to somebody who works at the bank and say, hi, here's my situation. This is how much money I have. This is what I do on a monthly basis. What's the best account for me? Because they should be able to help you out. And they should be able to serve you. So